All right, everybody, welcome back to my YouTube channel. Today, I want to put some of the market action in perspective. And I'm hearing terms like depression era correction being tossed around by the media. And I want to point out what's really going on. Yeah, surprise, surprise, surprise. You're not getting exactly the accurate information from the media or the best perspective. Shocking, I know. Most of the financial media don't know how to read charts. And for some reason, that scares a lot of people because they think it is mathy or something. But it really isn't. It's an easy skill to master, one that'll help you keep your own accounts in perspective without all the headlines scaring you as much as they are trying to do here. So I'm not downplaying the fear people are feeling right now about their investments and how difficult all of this is. But a lot of everyday Americans, not just the wealthy, have a lot of their assets in 401ks or IRAs and other accounts. And this is where your retirement savings could be right now. So today, what we're looking at is a chart of a mutual fund called the DFA Global Allocation 60/40 Portfolio. And it holds US equity, non US equity, and fixed income. And you can drill down further into the breakdown of these asset classes in this fund. Those are pretty broad characterizations I just gave you, but for today's purposes, this is fine. I would just end up getting bogged down in details if I spent time breaking it down further. I'm not going to do that to you today. I am showing you this because this is a diversified portfolio, all in one fund. About 60% stocks, about 40% bonds and cash. And its performance for the first quarter of 2020 was a decline of almost 15%. So what I want to do is compare this to the Dow Jones over here. And this is the one, and these three bars I'm highlighting right there. That's January, February, March. You do see there's, I'm recording this at the close of the market session on April 1st. So there you do have the first day of April. Now I want to show you the Dow because that's what everybody hears about all the time. The media are always harping about the Dow. Now the Dow only consists of 30 big US stocks. It's really not diversified much at all other than by sector. The Dow dropped by a little over 23% in the first quarter of 2020. So you may not be very excited about a drop of 15% as opposed to a drop of 23%. And I get that. It all seems very dismal right now. But I want to point out a couple of things. First of all, it is easier to climb back out of a more shallow hole than a deeper hole. And you can pretty much just envision that for yourself. For example, a loss of 10% requires an 11% gain to recover. That's pretty manageable. However, as your losses grow, the size of the return you need to recover starts increasing rapidly. So a 50% market loss requires a 100% gain to recover, and an 80% loss requires a 400% gain just to get back to even. So as we see by comparing the diversified portfolio to the Dow, having different types of investments does generally, over time, smooth out your return, even though both stocks and bonds did poorly in the first quarter. Some did less badly than others, though, and that sounds silly, but it does matter. One other thing I want to point out today, and that's on the topic of Depression-era returns. Okay, so I just switched over to a chart of the Dow in the 1920s up through 1940. But the part I want you to look at is right over here. That was the height in September, end of September 1929. And then you see, as you may know, it broke down in October 1929. The market crashed the beginning of the Great Depression. And you do see here over the next 3 years to July 1932, when it finally bottomed out, that was a loss of 90%. between 1929 and 1932. And it actually didn't get back to even until 1954, believe it or not. Now, I'm not getting into the politics of market stimulus today. I know this can raise some questions about that, but I can say this. Market oversight has improved tremendously since the 1930s and even since 2008, believe it or not. None of us know what will happen, but if you read stories about Depression era declines, know this. We are not experiencing a 90% drop in market value at this time. Okay? So the headlines like that are just stoking fear, and for the moment, they are inaccurate. And by the way, after the wipeout in 2008, it took less than 5 years for investors in big US stocks to get back to even. And some asset classes actually did rally more in the meantime. So, once again, if you had a diversified portfolio, it probably would have taken you less than 5 years. So, just telling you that. Today's message really is diversification may seem like a silly thing to consider right now, but it really is worth a look to see if you're doing everything possible to smooth the returns in your retirement portfolio while still being prepared to capture the upside when it does occur. Let me go back to today's chart of the Dow right there. Okay, there we are. Market history does tell us it will come back eventually. No one knows when. I'm not going to sugarcoat it, but history shows us these things do eventually pass. All right, thanks very much for watching. I hope you found that helpful today, and I will be back with another market video tomorrow. Thanks again.